Please welcome moderator Lorraine Akiba and her panelists as they explore how ESG will affect energy investment in Hawaii.
But aloha, everybody, and welcome to our panel on how ESG will ESG affect energy investment in Hawaii. We have a powerhouse panel today, I think I may have pushed the wrong button, so everybody else is here, but not me in person. I am here in voice, and you do see my picture, but don't mind that. I think more importantly, we need to get to our powerhouse panel, who's going to talk about ESG, environmental, social, and governance aspects of business performance. And if you've been paying any attention recently to the ESG news, you know that keeping up with ESG frameworks is navigating through a sea of alphabet soup. TCFD, SASB, GRI, CDSB, IIRC, and UN SDGs. And all these are voluntary reporting frameworks, standard setting bodies, and standard metrics for measuring environmental, social, and governance aspects of business performance and risk. And it's top of mind for many companies, CEOs, boards, as well as investors and social impact organizations. Anyway, I want to get to our panel. Let me briefly introduce them, and they will do an introduction of themselves. John Powers is a co-founder and president of Clean Capital. He joins us. Dana Sato, a director of leasing and transactions for Kamehameha Schools, and Scott Valentino, president of Pacific Current. This powerhouse panel is going to share with you not only their backgrounds with a brief introduction, but also I'm going to have them answer the first intro question about how do they incorporate ESG aspects, ESG investing into their renewable energy investment decisions as kind of a warm-up question, icebreaker question. So without further ado, let's go in alphabetical order throughout this panel. So let's start with John Powers.
Yeah, first of all, thanks so much for having me. Actually calling in from Western New York, so excited to be joining you all, and hopefully can join you in person next year for the summit. I'm sick of these virtual summits, ready to be in person. Lorraine, thank you for hosting us. To get to your question, how do we engage ESG? It's the whole reason we started Clean Capital. I had the honor to serve as President Obama's Chief Sustainability Officer of the federal government, oversaw what we did in terms of energy and sustainability, and realized there was a real opportunity to help unleash more efficient, cost-effective capital into the clean energy market. We started Clean Capital with that mission in 2015. We've now funded over $800 million in middle market, we call it middle market solar assets, community solar, commercial industrial. We're doing storage as well. We're in 18 different states and growing. But the reason we started Clean Capital was to attract that capital. The reality is that, and we'll talk more about this later, that capital has challenges moving into markets like the middle market because the scale of what it needs to execute on. Just in the first quarter of 2021, ESG funds raised $21 billion. They're expected to raise $1 trillion by 2030. So there's a lot of money itching to move into the industries that we all care about to solve climate change and specifically clean energy. So we have to make sure we put investable solutions in front of them. And I look forward to talking more about that with you.
Okay. All right. Dana, you're next. Brief introduction and answer the first icebreaker question.
Aloha kakayaka. Mahalo nui, Lorraine, for introducing me. My name is Dana Sato. I'm at Kamehameha Schools. And as many of you are already familiar with, Kamehameha Schools is the largest private landowner in the state of Hawaii. So I was asked to join on this panel because of, to bring in the perspective of the landowner to the conversation. So Kamehameha Schools is actually currently involved in 6 renewable energy projects. All 6 of them are really at utility level. So 5 of those 6 I've been personally involved with on different levels, reviewing the documents, intermixing with our energy partners and discussions. And And I think what's really unique about Hawaii, and I get some of this uniqueness from having sat through the earlier cultural discussion that was held in an earlier session this morning, is that here when we look at our ʻāina, when we look at our lands, we're also looking at our responsibility to malama ʻāina, which is to take care of our ʻāina. And one of our guiding principles is he ali'i ka ʻāina he kaua ke kanaka, which means, and we recognize that the land is chief, meaning that it will be here forever, and it truly rules, and that man is in fact its servant. And so we are here for a temporary period of time. And so when we look at this, we measure our stewardship of our lands against 5 values that Kamehameha Schools has. And our values are on education, economics, environment, culture, and community. So when you take a look from the landowner's perspective of the values that we stand upon, our expectation is that when we find our renewable energy partners that we're going to be working with, that we're not just focused in one area, we're focused in 5 areas. And many developers come to Hawaii thinking that they're basically coming here to do a good thing. That's always the great thing about renewable energy. That's a key. But trying for them to understand what that good thing means. And for our developers, and I'll tell you, it's been tough for them because we're not easy to work with either, is that we expect them to have education and provide educational programs through what they do. How are they contributing to the growth of our OEV leaders? How are they contributing to the growth of our keiki? What kind of career pathways programs can they offer? On the economic side, yes, of course, we need to be able to sustain the trust for in perpetuity. And so there is definitely lease rents and et cetera associated with that. But the economics also tie into, are you going to be hiring our local people here? So that our local people don't have to continue to struggle just to survive, to live in this paradise. On the environmental side, that's clear. It's pretty clear as to what that is. Culturally, we're always aware of what's happened on our ʻāina, being sensitive to how the ʻāina is being treated, and that ties itself naturally into community. So from the landowner's perspective, ESG stuff is really important. So with that, I'll toss it back to you, Lorraine.
Okay, last but not least, definitely is Scott Valentino. Okay, Scott, a brief introduction, some highlights about Pacific Current, and answer the icebreaker question of how you are incorporating ESG investing into your renewable energy investment decisions.
Okay, thank you, Lorraine. Glad to be here this morning. So Pacific Current, for those of you who don't know, is a wholly owned subsidiary of Hawaiian Electric Industries, the holding company that owns both Hawaiian Electric Company and American Savings Bank. So we're the third leg of the stool. Our mission is to deploy capital in non-regulated infrastructure that positively impacts our community and delivers sustainable long-term returns. And I will say that we actually operate in sectors, so we'll talk about renewable energy, but we are operating renewable power, electrification of transportation, water and waste, and looking at opportunities in agriculture as well. Our multi-sector sustainable infrastructure strategy goes beyond just electricity and aligns with decarbonization goals. As many of you know, transportation is one of the largest contributors in metric tons of emissions for Hawaii, obviously being an island economy. So we operate in all of the sectors that actually need to be addressed to actually deliver a carbon neutral goal by 2045. Also, as being part of Hawaiian Electric Industries, the large publicly traded organization, we actually published our second ESG governance report. So it is front and center of us. We are disclosing metrics both in SASB and TCFD metrics. We were formed in 2017. We are a mission-driven organization. I would say that ESG, without calling it even ESG, prior to the time was always in our DNA. We are really looking to be a catalyst for a better Hawaii and actually accelerate RPS and decarbonization goals through our infrastructure investments. One of the things we offer is actually a lot of solutions as a service model. So we're looking to deploy capital and deliver sustainable long-term returns for our investors, but offer solutions that could actually help adoption of some of these technologies if the folks don't have the capital to deploy. One of the more recent initiatives we've been looking at is how we can support more workforce and affordable housing development. Obviously, that's front and center for the state, but through renewable energy, and even we've been working with some distributed wastewater solution providers as well, and other innovative technology providers that can actually deliver this suite of cost-effective solutions to these developers.
Great. Well, I know everybody is, keeping on top of this, and I know that you're all very familiar with, recent reports about investors, institutional investors, and also major investors taking a more active role. And some of them are very dissatisfied with the level of ESG disclosures, and they're moving towards more disciplined and rigorous approach to evaluating these qualitative non-financial performance type aspects. We all heard about ExxonMobil, what happened at their shareholder, Andy Carson, who's actually, got points of affinity with our own Hawaii-based elemental accelerators, now on the Exxon board. You heard about the lawsuit and decisions out of the court in the Hague with the Royal Dutch Shell decision on climate. Things happening in Germany with, again, with the regulators going beyond, saying that, disclosures and work on addressing climate change was insufficient, and then mandating things. And our own SEC under the Biden administration is saying that they're clearly going to be moving into the future of a mandatory ESG disclosure framework for all publicly traded companies. Do you think that those institutional investors and these governmental changes are going to have any impact on Hawaii energy investments and what we're doing here? Are they going to have a direct impact given where we're at? Again, alphabetical order: John, Dana, Scott. Let's get some dialogue going here.
Awesome, Lorraine. Great question, and I think you hit on the overall trends that are happening in this industry, right? You've got massive amount of capital moving forward that are interested in ESG, environmental, social, and governance. In 2020, for the first time, ESG investing lived through a downturn. And in this last fall, the chief risk officer of Moody's talked about how that experience for investors is actually very positive, not the downturn itself, but the fact that ESG investing continued to thrive, continue to be active in returns. And now you're seeing just a continued thrust of capital moving in. I call it, we're at the apex of, called from Greta to the boardroom, right? You've got the cultural emergence of folks interested in these issues of climate. And then of course, as you mentioned, the board level, these conversations are happening. What's very exciting to me, and I'm gonna step out of Hawaii for a second and step into Washington, D.C. Under President Biden, for the first time ever, we really do have a true all-of-government approach to climate. And you have climate advisors now, not just at EPA and in Department of Energy, but at places like Treasury, the Department of Defense, and Interior, at the most senior levels with the secretariats. And as a result, you're seeing things like a Treasury where, as you highlighted, they're trying to eliminate the concept of greenwashing and trying to really professionalize ESG investing. Those are all very important in the weed dynamics where folks can understand how their money is being managed within the ESG space. But the other real important trend is this wave of capital and what to do with it. How do we bring it into the assets that you are all looking to invest in from an infrastructure perspective in Hawaii? And it's not easy. These are looking for scalable level solutions that, when you talk about BlackRock or pension funds, they don't get out of bed for under, $300 million for their checks, right? Which is a huge project or a whole set of projects. So then how can we as an industry look at putting together and compiling a big enough group of projects to attract that type of cheap long-term capital? It's difficult. It requires from a state level policy that's consistent and not changing, so that they understand that when they're making these investments, hopefully it's cheaper capital, but it's also investing for not just 3 or 4 years, but hopefully 15 and 20 years, the life of an asset. So when you think about that type of investor, they're really interested in ensuring the certainty of the money they're putting to work. And that's sort of our line. I mean, this is what we do with Clean Capital. We help bring them to those deals and put those deals together. But it's not easy if you're a developer in the industry to have access to that type of capital. So you have to find different folks that can provide access and figure out how to work within that framework. And if you don't, you're just going to bring other capital, but it's going to be more expensive capital, like private equity capital, for instance, which is going to make your project often not pencil out.
Well, you know, it's just a stakeholder capitalism. I mean, what you're describing now is stakeholder capitalism, and a key stakeholder, you know, Dana, you represent a key stakeholder here in Hawaii, you know, not only a steward for, you know, for many of the lands in our communities, but, you know, a major landowner. So, you know, let's hear your perspective on that. Do you think that this, you know, this institutional investor, you know, large investor movement in terms of ESG, how is that really going to affect us in Hawaii and what we're doing here? You know, we're kind of leading already on this from what you said, you described.
Yeah, I guess one of the things I'm just happy about is just the fact that this is a key focus now. The ESG investment and thinking is a key focus. I think it's also, when I was listening to one of the earlier sessions as well, and something that John just mentioned, is that the hope is that we can find these more long-term investors, because what we see a lot of time is that investments come in because the investor is excited about a project and then they leave. And that just kind of leaves communities hanging. And from a cultural perspective, it really leaves people in a way just kind of hanging. And that's part of the reason that it actually is, when we look at our renewable energy partners, I mean, quite frankly, we're wishing that we can work with more local companies. Just simply because if we can do that, we know that they're going to stay home. They're going to provide, because they're providing for their own families, their own ohana within the islands. And to the extent that these companies here can both get the training, be able to develop it at that level, find the ESG investors, would be probably the most ideal situation for the state of Hawaii. We're sitting in the middle of the Pacific. We have wonderful weather here for all kinds of great things. But our land is tough. It's tough to get to. We're trying to, at the same time, be able to preserve our agriculture to deal with food security. That certainly is an issue across the world from this past year and a half that we've gone through. So there's a lot of things that are happening there. I really think I'm just super excited that ESG is finally on the table and that climate change is finally on the table. And we're doing the kind of changes that, even as Mark mentioned, from the Washington, D.C. perspective, things are changing in the right direction.
Hey, Dan, this is John. I actually have a question for you. Sorry, Lorraine, to jump in, but
no,
I think you made a really interesting point, which is how to build that bridge between the local developers, right? Who, I think you're right. You want to have folks on the ground that will be there. I mean, as a project owner, you want folks on the ground that will be taking care of those projects. We're not flying people in all the time to do that, right? But then how do you build the bridge between them and the ESG investors, right? Because the one nice thing about the larger institutional investors is many of them have that quote unquote cheaper cost of capital, right? So you can actually deploy more renewables and deploy it in a more efficient way. But you have to have bridges, like, and this is what we do, Clean Capital, but there's others as well, to help bridge that and make sure that folks on both sides of the table are speaking the same language, right? So, you know, we're ensuring that, you know, we're understanding what you guys need locally, but then you guys can also understand the dynamics of what these larger investors are looking for in terms of their capital flow.
Exactly.
And feel free, you guys, to chime in. Feel free, you guys. I mean, Scott, you know, if you got an additional reaction to what Dana just said, feel free. But, you know, Scott, you're one of those. I'm going to kind of punt to you now because what John just asked, I mean, you're the one who can answer that question. You kind of, you have one foot in both worlds, right? You're in that corporate, you know, I know that HEI's got these institutional investors and also social impact investors, major, you know, the big fish investors as well. And yet you're grounded and based in, you know, your other foot's in Hawaii in terms of, you know, local Hawaii community and, you know, governed by the principles here of, you know, what we talk about in terms of the public trust and being very cognizant of stewards of the environment and the land. So why don't you respond and take that?
Yeah, no, Lorraine, thank you very much. That's a great point. Obviously, being part of Hawaiian Electric Industries, the larger publicly traded company, we do have large institutional investors. So there is a balance. To John's point earlier, you know, we are limited in project size here, right? So it's replicability, scalability, what can be applied with new technologies across the islands, and coming up with solutions that aren't just one-off solutions, but that can be applied across the islands. Because each of the islands is its own unique island, if you will, and each has its own challenges. Obviously, Oahu's got much more land scarcity than some of the other islands in terms of what we need. So, you know, that does create a challenge. But I think in terms of your prior question on disclosure is absolutely critical. I think companies are continue, especially public companies, are going to have to continue to improve in terms of their disclosures and communications. I mean, I think one of the things we've, you know, going back even a year and a half ago or so was articulating was when BlackRock came out here, I think it was January of a year and a half ago, basically understanding that the dynamic of a company in Hawaii is different than the dynamic of a company on the mainland. We are an island economy. I think one of the things I didn't bring up before, but with Hawaii Green Growth, we have a set of local Aloha Plus sustainability development goals similar to the UN SDGs that we track and monitor. And this actually was ongoing prior to even the formal adoption of ESG, if you will. I think, you know, we all experienced this through the pandemic. We all need to collaborate. I think I've found in this environment that a lot of the companies are much more collaborative in terms of coming up with solutions that are specific to Hawaii. So there's a lot to be said there. I do think that, you know, obviously, I think we've been very successful in attracting large mainland sponsors into some of the renewable energy projects over the last, let's call it, solicitations. But on the smaller side, you have a different universe of players here. We're not really, I wouldn't say us, we're an early stage developer. We actually typically come in later and deploy capital into these projects, but we're not out doing the greenfield development projects, if you will. But, you know, I do want to communicate that we are a local investor. We're always looking to deploy capital, and we do have a lot of capital to deploy, and it's just finding the right projects to put it into. So I do get the sense being here that obviously there's a preference for local. And you know, but I think there's partnerships also, that there's a lot of technology providers that aren't necessarily focused on Hawaii, because Hawaii is a big enough market to attract attention, but not necessarily if you're looking at other markets in terms of a growth. You know, one example of that is we formed a joint venture with a company called Evercharge, so Evercharge Hawaii, which is focusing on a deployable and scalable, cost-effective level 2 charging solution that really hits multi-unit dwellings, condominiums, and workplace charging, because we believe that if you're not offering charger, when you have half your population living in high-rise condominiums in Oahu, if you don't have EV charging at home and you don't have EV charging at work, you're likely not going to buy an electric vehicle. So really pushing on some of these initiatives and looking for examples like that, where we can find a scalable solution that actually works well in Hawaii and bring that solution to market here.
Yeah, because, you know, thanks for mentioning that, Scott, because I think that's the thing that we've always, you know, been very proud about Hawaii, you know, that we've been leading edge, living laboratory. Many of the things that we've demonstrated and actually implemented successfully first, then are replicable or followed by other states, other jurisdictions. Because we are island grids, we have the benefit of being able to test and demonstrate and implement on a smaller scale. You know, and the regulators here have oversight over that, as well as, you know, there's a coordination between utilities and stakeholders and developers and other, you know, grid edge technology providers. So, you know, is that something I think that is the fact that we are small, can that be a strength? You know, small but mighty. So can we kind of flip that paradigm? And is there a way that we can then, because look at, I mean, Commissioner Potter is going to kind of take the dais right after our panel. She's going to be talking about a very cutting edge. We are the first state in Hawaii to do performance-based regulation. And I know a lot of, the folks that are on this call were participating in those technical working groups. It's really aligned with the ESG reporting and metrics. I mean, the things that the utility is having to report on under the PBR and some of the outcome measures and the metrics, very similar to ESG reporting, very similar in terms of, greenhouse gas reductions, renewable energy integration, resilience, So any comment on that? I'm just going to open it up. Anybody want to jump in for that one?
I mean,
No need
Lorraine,
to
I'll start with that one, Lorraine. Yeah, I absolutely do think so. Outside of even energy, I think if you think about the island economy with what's gone on with waste diversion and you know, in landfills here, there's obviously a lot of new technologies that look at more waste diversion, not necessarily going to energy, to either fuels or to other sources, even to RNG or to hydrogen. I mean, so I like to think of this, and we've had some discussions with certain folks for technologies that may be not purely commercially proven, and I'm not saying that we invest in pilot projects, but this is a great market, given it's an island economy, to prove out certain technologies and to get some folks that have creative solutions in here. So I can tell you on the waste diversion side, we've talked to a lot of folks that might have some potential solutions that would be great for across the islands. And when I mentioned earlier, these are not one-off solutions, right? Each of the islands has its own sort of problem with landfills. So it's going to be replicable across the islands. And that's just one example. There are other technologies. I've always thought of this market it is the right size to test out and prove out a technology that then can be deployed elsewhere. So that's my opinion.
Okay. Any comment on that, John or Dana?
I mean, I think the advantages you guys have locally are pretty strong, right? And the more that, you know, I said this in my opening remarks, but the more that there is certainty in terms of things like policy, and Hawaii has come a long way there, and really sort of being a real leader, partially because you had to, but partially because the people are demanding it. The better you are to attract capital. What do I mean by that? So let's take it out of Hawaii for a second. You know, we're dealing with a situation in Massachusetts where the Department of Energy, basically what they call themselves in Massachusetts, is changing rules that were in place in the early part of solar, affecting assets that were built in, say, 2014 and 15. So what does that mean? So here you are 10 years, less than 10 years into a long-term power purchase agreement, and all of a sudden the rules are changing. And when you look at that, the investor says, oh, that's a much higher risk investment now, because I need to understand how my investment is going to work over the course of this 20 years. And if you change the rules the reasoning is not very solid there, the reason they're doing it. So when they do those type of things, what they do is they cause the cheaper institutional investors to back away, and you have, again, more more costly, I use private equity as a term, but you know, costly less risk averse, or more risk averse investors, and that's just going to make the projects hard to pencil out and make them more expensive. So, you know, it's really important for the policymakers to understand that when you're looking out at policy, you want to provide as much of a guidance and pathway ahead as possible, because every time you deviate, you know, you're affecting really the capital. And you can think about it, just think about it this way. If you're a life insurance company and you're investing in any asset, you want to guarantee you don't lose your money 20 years from now, because you got to make sure you can pay the life insurance. So they look at, that's really cheap capital. It's great for our industry. We want to bring that to the table because it'll be a lower PPA costs and lower soft costs to get deals done. But if they don't feel comfortable in our asset class, there's a lot of other asset class they can invest in, right? Things like real estate and other mechanisms. So it's really important for us as an industry, policymakers, to understand the finance side of this. And many don't. I say that as a former policymaker, I didn't either. Understanding how your policies are going to affect the way these deals are structured and financed.
Yeah, I think that's always a message, John, that, you know, the regulators need to take to heart, is regulatory certainty. You know, and that's why, you know, whether it's Wall Street and the analysts, they do want regulatory certainty. When you have clear outcomes, you have clear measures, you know that you know, there's everybody has a level playing field. That makes a difference for you know, for not only investors but also for those who rate the investments here. So, you know, that being said, don't you think that you know, now that we've heard like the BlackRocks and the Vanguards, and they say that climate risk is investment risk. So isn't that basically, if you look at Hawaii, when you look at what we do, we're already hitting some of those ESG metrics. I mean, you get, you talk about 2 first, 3 first, you address renewable energy, you address sustainability in terms of resilience. Aren't we, in a sense, don't we offer more by virtue, even if it's a small scale, don't we offer more, carbon credits, carbon capture, decarbonization, check, check, check. So is it really also getting, making sure that it doesn't mean you have to check off everything on the ESG metrics, but what particular metrics there might be, or ESG standards we actually exceed in. So any comment about that from anybody on the panel?
I think those metrics are incredibly important. I think, as you said it so well earlier, those metrics are still a real gray area. So people measure them in a variety of different ways, and the more clarity we get on understanding those metrics, they'll be easier to measure off of. But I think you're 100% right. Hawaii should be able to hit on a lot of those different categories and return that level of certainty back to ESG investors. But again, when push comes to shove, they're still going to be looking at returns, and they're going to be looking at how their capital is used. So understanding what they're looking for, and the clearer that comes out, and I think we will see it come pretty clearly pretty soon out of the SEC. The more important, the understanding those metrics and figuring out how you can fit your projects into them, for instance, are going to be really important. Because we have to measure. I mean, we're going to be measuring them as we take loans and tax equity and debt and everything else. So we're going to be reporting that stuff out. But right now, there's not a really clear reporting mechanism on how to do it. So, I think that is being clarified, and I think that should be to the benefit of Hawaii.
So Dana, so how will you translate this? And, we can do this in a vacuum, but, it all comes back down to community, to land. So how do you see, Kamehameha schools in this, in terms of either sharing this with community or educating community stakeholders? I mean, because we can talk about this in a very esoteric way, but it comes down to when we want to do projects in communities to have understanding, buy-in, and support. So how does Kamehameha Schools approach this when you're working in a community, and let's say being a partner with a John or a Scott, in terms of developing projects and keeping in mind ESG qualified projects emerging in our islands, with utility and enterprise scale economics. So how do you translate this down to, the management of the ahapuaha and the very particular people that you're affecting in terms of any projects you're working on?
That's a pretty deep question you just asked her, Lorraine.
It's a tough one.
Well, because it's super meaningful, because what you're really talking about is you're talking about community engagement and what that truly means. And when we when we talk to developers have to, number one, get by the values that I mentioned earlier for Kamehameha Schools as a landowner. But then the next level is they have to actually meet with the community. So KS is like a community in and of itself. And then you have to actually get down deeper with the community of the area. And that's what's really key. I think a lot of developers come in here and kind of just look at the lands, and they just sort of dive in and talk to people. But the question is, which people are they talking to, and what community are they speaking with? Because as you know, Lorraine, in Hawaii, if I'm a Maui girl, if I were to walk over to lands on the west side of Oahu or the north shore of Oahu, that is not my place. I don't have the right to be able to speak on behalf of that community because I am not from that place. And so when you're talking story about community, as developers are looking and coming in here, you're looking and relating that specifically to the ʻāina of the area and the ʻāina of the people within that ʻāina, and talking story with them about these very issues. And and it's a tough crowd. And I like the way Scott mentioned it earlier, that we are We're a great area for test case because we're a small area, because within that small area we have everything, right? If you just picture yourself going out to the North Shore, you have everything from the cultural issues, you've got huge tourism issues, you've got agricultural issues, and you still want to do renewable energy to support that. And you have just the human factor of people wanting to just be able to get home after work, which they can't really do right now with the tourist back. So we really work and really rely upon our energy partners to really reach in deep on community engagement within the areas that there are, and to have these deep conversations. We can start it up, but it's them that actually have to do the really major pull on what's happening.
Okay. That's, I think, the uniqueness of Hawaii. You know, we are island peoples. It is an island culture. So thank you, Dana, for making that point so heartfelt, you know, and that's part of Kamehameha School's mission. So we're kind of counting down now to the final minutes here. So it's kind of like the speed roundtable here. So I want to give everybody, you know, one last thing that you want to share with our audience here as a major takeaway or an insight that you would like to share in terms of ESG's effect on energy investment in Hawaii, or anything you want to share, I mean, going forward in terms of an observation, insight, shared thought. Start with John, then Scott, then Dana.
Sure. First of all, I just want to thank everyone for allowing me to be part of the conversation. Dana, I loved your comments about things being local. I'm a former elementary education major, so I love the idea of connecting the schools to these systems. And it's not easy to do when you're not there, right? So the one thing I'd say, though, just of the overall conversation, we are at the cutting edge of a transformational decade for clean energy. We no longer have to prove the technology works. You know, the capital is moving in a way it's never moved before. But to solve climate change, we need to put $1 trillion a year to work in this space. And we just hit 500 million a year recently, and it took us a long time to get to that. So it's going to take a lot of capital and a lot of projects and a lot of efficiency to move that type of money. And it's sort of incumbent on all of us to understand how to use that, how to bring efficiency to this market, and help scale the opportunities to address the climate crisis we're facing. So hopefully be a part of the solution in Hawaii, and hopefully, you know, we can bring some of the lessons that you're learning there out to us here in the mainland. So thanks so much.
Scott?
Yeah, I want to thank everyone. This has been a great panel, and I think, you know, one of the things you brought up, Lorraine, earlier is obviously climate change is real here. I mean, I think, you know, it's been a major, and resiliency is a real focus here, obviously, with being on 7 different island grids. I think renewable energy and the path we're going forward on is a great solution to providing, you know, more microgrids and more of that type of resiliency. I think, you know, the idea of bringing technologies here and improving them out, I think is great. I think that will be exportable, if you will, to other island environments or the other environments. I think we face a lot of challenges here outside of energy. We have the whole cesspool and you know, getting off of cesspools by 2050. So wastewater is a big issue. Injection wells, you know, so you can name it. So we have a lot of unique challenges in our island environment, and basically Pacific Current is kind of actively looking at addressing all of those. But I appreciate the time today. I think it's been great. And I think, you know, bottom line is, I think, you know, if you didn't know Pacific Current before, we are a local non-regulated infrastructure investment platform that is looking to deploy more capital across the Hawaiian Islands. Thank you.
Yeah, so yeah, Scott, in fact, there was a question which I didn't get to, but there was a person that was asking if they were interested in investment opportunities for Hawaii, who would they contact? So I guess that's John and Scott before we head over to Dana, or even Dana, who's, you know, as a land owner of Kamehameha Schools, has been active, you know, as an active partner. So Dana, last thoughts before we have to conclude our panel today. We leave the, you know, the closing remarks in your good hands. Oh, you're on mute. You have to unmute.
Kalamai. I pressed the button with a double click, so I unmuted and then muted myself at the same time. So, well, to the panels, it's great to be a part of this conference and this conversation. And Lorraine, your closing comment actually is a great lead-in, because for us, you know, we're not developers. We're not energy developers. We're not farmers. We are the keepers of the ʻāina that supports those types of operations. And so don't bring your money to us. For us to run a project, take your money to companies that really know what they do, and companies that work locally. So what we're looking at, and what is really reliance upon our energy partners to bring in that level of technology, that level of training, and as John used the word of bridging our investors from other lands to come to our lands here to recognize what we can do here in Hawaii. As Kamehameha Schools, we are just focused on stewarding our ʻāina to support resilient economies, you know, and maintaining cultural landscapes, looking at diverse ways of learning through these energy partners and otherwise, and certainly tying that all together with career pathways, so that we may one day have those local developers that can serve, just as what Scott and John have been talking about. So mahalo nui, everyone, for this opportunity. You guys have a great day.